Friday, March 17th, 2023, Maneco 64, home of alternative economics and contrarian views. So today I'm speaking with Andy Schectman. He's the co-founder and president of Miles Franklin. Andy, you're a busy man these days with everything that's going on. How are you?
Mario, it's so good to be here. Look, I've done this for 33 years. I've never experienced anything like what we are seeing right now. I'm going to give a little bit of color and context. You know, I remember Silver Squeeze, and I remember telling people that I'd never seen anything like that. And I want to explain the difference between motivations in life, and people can understand what I'm getting at. In Silver Squeeze, I would work 18 hours a day between doing interviews with, at that point, the newly burst on the scene Wall Street Silver and Chris Marcus from Arcadia Economics and David Morgan and all the silver folks I was doing interviews with and working 18 to 20 hours a day, one call after another, an email and call and email. My whole staff was. And it was truly at that point, unlike anything anyone had ever seen in terms of demand that was so extreme, it was hard to explain to people what it was like. I went on a vacation down to Florida at the time where I subsequently ended up moving for 10 days. I was there and I spent one day outside that house and I came across the other side of the state to look at where I am living here now and made a purchase actually. But 9 out of the 10 days I was there, I did not leave the house but to work. That was it, inside the house. I didn't leave but to go out and get a breath of fresh air, nonstop. The difference then was that people were looking to make money. It was greed. That was the motivational factor was greed. They were looking to capitalize on the AMC and the GameStop and well, let's squeeze silver and these banks and we can make a fortune. And it was different, right? It was different, but it was out of control. What we are seeing now is that on spades because there is no motivational factor quite like fear. And it is oozing from people. It is dripping off of them. It's palpable. And I have never experienced the anxiety that I have experienced since Sunday of this last week, where we were doing as much business on Sunday and Monday as we would do in a month. And people are really, really very concerned. It is very different this time than Silver Squeeze, where people wanted to make money. Here it is about people doing everything they can to keep from losing it. And this is one of the reasons that I say the market ultimately will define itself by a lack of available product. Now, one last thing I'd like to mention in this respect, you know, most of the people in this country lived through last year and figured, well, you know, S&P was down 20% and 10-year treasury down 15-16%, the most in history, the third or fourth worst year ever on the 60-40 stock bond split. But that's an anomaly, right? It always comes back. Well, you know, in 2008, when it crashed, the Fed's balance sheet was 850 billion, and now it's 9 trillion, and all of that with interest rate sensitive investments, treasuries and mortgage-backed securities, which suppressed interest rates, which allowed an illusion of prosperity to grow from the financial crisis. And so, yes, and I think it was really very, very different than what we are seeing right now. And I just think that there are there's a gradual awakening happening right now. But you know, even still, as Rick Rule will often say, 0.5% allocation across the entire financial matrix in the United States, from the Harvard Endowment Fund all the way down to Joe and Jane six-pack, has any allocation to precious metals. And one thing that I would like to say is that this is changing, and maybe it's changing not only because of what happened with the banks, not only because of the poor performance in the markets last year, but for the first time that in my career, which is now approaching 33 years, you have states in the United States that are waking up, whether it be Missouri, Wyoming, Idaho, Kansas, Tennessee, Mississippi. All of these states are proposing. I think Alaska has one on the docket. They are proposing. Some of them have already passed it through their legislature to allow gold and silver as money to be held in the treasuries of the state and to be allowed for purchases and any debts, public and private, to be paid with precious metals. And as one of the representatives said in the state of Idaho, as he got up on the legislature floor, he said, we need to let the citizens of Idaho do the exact same thing the central banks are doing, and that is accumulating gold. There is a drive, a push in some of these red states to allow their citizens to break free from the brain dead monetary policy of our government. And I think there is going to be an awakening. I will simply say this: if we see a sniff of another bank problem, which I think we will, when we talk about what Janet Yellen said yesterday, and there is a drive to get more precious metals, I am telling you, it will disappear, because there is such a difference between wanting to make money and protecting your ass that I've never experienced anything quite like it, where people are calling me from the West Coast at 1:30 in the morning and not even really saying, oh, I know it's late, I'm sorry, can you talk? I mean, normally when you call someone at 1:30 in the morning, it's better be an emergency. Of course, I was up working, so it wasn't a big deal. But I guess all I'm simply saying, Mario, this is unlike anything I've ever seen. And I think that this is just the beginning.
Yeah, and I was speaking with you before we started about this book here, Fiat Money, Inflation in France, and it's about when the French went on a money printing, paper money experiment during the French Revolution. And at first they said, oh, we're only going to issue so much, and then we're going to stop because it's dangerous. We had a problem in 1720, the Mississippi bubble. But then after every issue, the economy improved, and then it came down, and they had to keep issuing, and then eventually it ended in collapse of the currency. And this book, I mean, I've had it for 20 years, and it's been a real guide for me, because when I first read it, Ben Bernanke was talking about helicopter money, and I didn't like that. And even the introduction was by the president of the Bank of New York, John, what's his name again? Traffigen, Bank of New York in 1933. And what happened in 1933? Well, FDR had to close the banks that year. So he was trying to tell the people that he gave each person who worked in that bank this book, and so that they would know what paper money leads to. And it seems like it's taken 90 years maybe to unravel. We don't know yet if it's going to unravel. And just wanted to ask you, before we look into the banking situation, what you think. Maybe you could tell the viewers in North America what you can do to help them on the precious metals front if they want to protect some of their so-called deposits in these shaky banks.
You know, I don't make this offer to everybody, but because I'm a fan of what you do, and I watch everything that you do. You're one of the few people that I pay really close attention to. And not only is it an honor to be asked to be on your show, but to have a relationship where you trust me with your listeners is something that I take very seriously and with great appreciation. I would like to offer your listeners, if at all possible, I think we can do it, the very, very, very best price in North America for whatever they want to buy here. And you know, it's something sometimes that we're not able to do once in a blue moon, but 9 times out of 10 I can. And for your listeners, please send us an email at info@milesfranklin. Say Mario sent me, and I will do my damnedest and let all of my brokers know to sharpen their pencil as sharp as possible for your listeners. And gold or silver, whatever it is that they want, we would love to get a chance to work with your people. And you know, I've been telling everyone that our website was due in August of last year. And I mentioned last time on your show, it's been an awful experience. This website right here will not allow you to purchase. The new one will. And it's so close to being done. It's almost there. but send us an email at info@milesfranklin. We'll send you an updated inventory list. We'll answer your questions. Say Mario sent me, and I will promise that I will do my best to make sure it is the best price in the United States. And just my way of saying thank you. We do have a decent supply, although it is flying. We did, I don't know, north of $50 million in sales since Sunday. It's really quite extraordinary what's happening right now. As you can see, gold up $40, silver up 60 cents. I remember listening to Richard Russell and to Bill Murphy and some of the older folks in this industry who I've been either admiring or, in the case of Richard Russell, miss so sorely, but people that I've been following for a long time, and Jim Sinclair. And I remember them saying there will be times in the future where silver is up in dollars and gold up in hundreds of dollars. And we're not there yet, but you can see this. You can see we're getting very, very, very close to that. So, yeah, I think this is a crazy time, and I think it's just beginning. I truly think it is just beginning as people's motivation is shifting from wanting to make money, the greed side of things, to I don't want to lose anything, and being terrified, and the fear aspect is taking over. And quite frankly, I don't blame them. I did it myself. I emptied out my US bank account because I'm afraid. And I bought gold and silver with it. And I'm the guy that's been buying it every 2 weeks for 33 years. And still, not being the poster child for Finance 101, I completely and totally get it. But I do not see another place where I feel comfortable leaving my money in this environment. And, what Janet Yellen said yesterday, I think everyone needs to understand is really frightening. She was speaking and in front
Yeah,
of.
I've got it here. Do you want me to?
Yes, please play it.
That's is the Senator Langford.
This is it. This is unbelievable.
Yeah, let's listen to it.
Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVBP just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is
And
your
we made
plan?
that determination.
Right. So
to
what
these
is
two
your
banks.
plan to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole. But
Is that enough? I guess.
Yes.
Yeah. The one thing I would say, Andy, before you give your opinion about Yellen, is that she earned about $8 million just before, after she left the Fed and before she joined the Treasury, speaking to major Wall Street banks, to Google, and to major corporations. So it seems to me what she said there to Senator Langford from Oklahoma is that it's a political decision nowadays whose bank deposits they're going to save, and I think that's worse than Cyprus like 10 years ago, because in Cyprus, at least, people who had over 100,000 euros, even companies, they lost everything. They followed the rules, and here they're not. And I just had a look at that First Republic Bank, which all the major Wall Street banks put like 30 billion into. That's another SVB. It's all for high net worth individuals. So it seems like they're trying to save the 1% here, and on the back of the community banks. What do you think?
Yeah, I think it's unbelievable. Some of the executives at that First Republic Bank sold millions of dollars worth of stock a few weeks ago, leading up to this collapse. But they are sticking a knife in the heart of the community banks, the small banks. They're going to collapse them, and they're going to herd everyone into the large, too big to fail commercial banks. And, you know, the frightening thing about that, if you want to extrapolate and, you know, and this is all supposition, you look at someone like Lael Brainerd, who just left the Fed, and she was number 2 there, the vice governor of the Fed. And before that, she was at the Treasury, and I'm not exactly sure where she is now. But the point of it is that her whole main thesis was abolishment of the commercial banks and a central bank digital currency as a modern monetary theorist. So, I mean, if you really want to be conspiratorial, you kill all the small banks, you herd everyone into the 4 or 5 large banks. And if you really want to break the system, you let a couple of those banks go down, and that is impetus for ushering in the new CBDC to make everybody whole. This is something that, you know, there's a fine line between conspiracy and reality, but what they are doing is penning everyone, herding them into a handful of the biggest banks where billions of dollars worth of deposits are leaving every day from these small banks. These small banks that it's really important to understand what exactly that means, that will not be bailed out. These banks, first of all, it's important to note that when a deposit is made at these banks, the deposit is not an asset of the bank, it's a liability. And those liabilities need to be offset with something. And usually it's a bond, a treasury bond or a mortgage-backed security. And during the pandemic, Biden removed all the reserve requirements. And so these banks have very little currency on hand to meet demand for redemptions. And so when you realize that most of the bonds that these, you know, all these deposits that were made, the banks are gambling with them, especially the small banks trying to keep up with the bigger banks. They were gambling with them and putting them into things that aren't so speculative like treasuries, but things that are more speculative, maybe like mortgage-backed securities, most of them at rates much lower than we have right now. So their balance sheet is loaded up with bonds at saying 2.5%, and now we're approaching 5%. So what happens is that when there is a run on the banks, even a small one, these small banks are forced to liquidate these bonds that have lost over half their value or more, just to meet demand for withdrawals. And as we saw, you get a larger rush and a bank can become insolvent in 24 hours. And the FDIC cannot handle this. Their insurance fund only covers 0.03% of all the total bank deposits. 1 or 2 banks fail and they'll drain it all. Now, we thought last week that the Fed was going to backstop it, and well, it won't go on the taxpayers. They say, well, yeah, they're going to inflate it, right? They throw money at it and the dollar's dead, right? But I think now what they're saying is, well, if they're too big to fail, they'll be okay, but the rest of them aren't. So you're going to get a rush on all of these people. And businesses like mine, I'm thinking, I got a lot of company money in a bank that, should I move it? I mean, it's not a big bank, it's not a small bank, but should I move it? Should I move it over to Wells or to Citi or to JP? And I guarantee you a lot of people are doing that right now. Billions and billions and billions, creating a run on the small banks who are going to have to sell their bonds at a loss, and it's going to collapse them. Those banks are dead on arrival, dead. And if the Fed doesn't bail them out, it's only going to exacerbate this fear and this concern. And everyone is going to be penned into the banks. You look at a derivative position of a bank like JP Morgan, it's like over $50 trillion. And, you know, there's a fine line between conspiracy and reality. But all I can tell you is the decisions that this administration is making continue to confound me, continue to make me scratch my damn head. Like, where are we? What are we doing? We are becoming the laughingstock. And when you put all of this together with everything that I've been talking about for the last 2 years on the Belt Road Initiative, the Shanghai Cooperation Organization, the BRICS nations, the Eurasian Economic Union, that comprise almost 85% of human population, moving away from the dollar, de-dollarizing, striking deals, OPEC joining the BRICS nations, telling the folks in Davos we're open to taking other currencies for oil settlement. Do you not see, people, what is happening? The West is being laughed at. And these types of stupidity-laden decisions that are destroying the value of the dollar, destroying our credibility, is only hastening the demise of the dollar. And accentuating and exacerbating the push to de-dollarize by these countries. And God forbid you get Japan and China dump their 2 trillion in treasuries. You know, Jim Willey, who's someone I respect and I follow a lot, he's a lot more fringe in terms of what he talks about than the mainstream. That's for darn sure. And I don't know where he got this information, but I'm going to run with it. And he says that Japan is this close to making an announcement that they're going to join BRICS. You want to talk about the death knell to the West and to the dollar. All I can simply say is it's almost as if they are trying their hardest to incite a controlled demolition of the Western system and of the dollar. You couldn't make dumber choices if you had to. And I think this is a lot bigger than the media is leading on to believe, because you watch these banks go belly up and the daisy chain that this will create. And you remember, we've talked about at length. I know you have. I talked about it with you on our last show, and I've talked about it ad nauseum for the past 2 months. The FDIC told us this in November. There will be bank runs. There will be failures. In their Systemic Resolution Advisory Committee meeting of November, they announced it, and it snuck out to YouTube by accident. They didn't announce it to the people. They said, you know, the public who has more faith in the banking system than the members of this board do really need to know there's going to be bail-ins. They need to know this. But if we tell them, because the institutions already know it, if we tell them, it will lead to unintended consequences, bank runs. And when those bank runs start to happen, and now that they put the line in the sand, you're going down, but we'll save you. Don't worry about it. Continue to gamble. It's a massive, massive, massive fuse that's just been lit. And I tell people right now, you better buckle up. And if you've been thinking of buying gold and silver to protect your ass, you've got to do it now, because I believe it will be events like this that is going to wake up the masses who have been asleep, realizing that 0.5% in this country has any allocation to metal. Mario, this is the fuse that will ignite the masses and will wake people up to the only place in my mind that you can seek any refuge from, and that's precious and precious metals.
I agree 100%. And you talked about that FDIC leaked video, but do you remember back last year? It was in June 2022. That's what Jamie Dimon said. You know, I said there's storm clouds, but I'm going to change it. It's
hurricane. Yeah.
So,
yeah.
You know, you have to listen to these people when they say something like that.
It's like they want to drop crumbs, just enough so if you're really paying attention. But, you know, guys like you are the media. Right? You're the media, not CNBC, not Fox. I mean, I like Tucker Carlson, I like Fox, but they don't talk about any of these things, maybe a little bit, but not the severity of what it really means. Actually, I take that back. Fox talked about it last night, but not enough. The information is coming from people like you who have been warning people forever. And it's interesting, human nature. And this is why there is a whole school of investment ideology, wave theory, like Kondratiev and Elliott Wave, where human emotion dictates the direction of the market. And I'll tell you something, when you talk to people like I have for 4 straight days that are freaking out, it starts to ooze from my pores. It's like I've bathed in people's anxiety. It's nuts, man. I can't even explain what it's really like. But I will tell you that I have over 700 emails to reply to. 700, me. And all I do is I'm sending emails till 2:30 in the morning the last few nights. Last night until 2:30 in the morning, I'm sending emails. And that's just me, not even our company. We're getting hundreds and hundreds and hundreds and hundreds of inquiries, and people, I'll take whatever you'll give me. It's never been like this. And I think it's just beginning. You see one more of these banks go down, and the contagion and the systemic risk that is built into the system starts to take hold, and they let a couple of these banks that aren't too big to fail go down, and you will see anxiety to the nth degree. And we've been talking about Credit Suisse. They're one of the systemically too important to fail banks. And look at them. Their share is like $2 a share. They're circling down the drain. Had to get a bailout from the Swiss National Bank. But what no one's talking about, not enough people, maybe you have being in the UK, is that a few weeks ago, the Fed bailed out the second largest bank in the world, and nobody talks about it. They gave $20 billion to the Swiss Credit Bank which is very near bankruptcy, who immediately then laid off 9,000 workers after they received a $20 billion bailout from the Fed. Why isn't it the Swiss National Bank doing that? Why are we? Because the contagion, because the systemic relationship is incestuous and it will bring down the system. And I think we are on the cusp of some really scary things that I think are just beginning. And that's why I, with passion, and you know, that's why I get up in the morning and do these shows with you and everyone else, because I really believe I want to help as many people as I can, or at least open people's eyes. And you have to stop believing the system will get better, because it always did. It only got better since 08 because the Fed added over $8 trillion in treasuries and mortgage-backed securities to create an illusion of prosperity through suppression of interest rates and easy money, which only incentivized people to take on more debt and to speculate. And that's what pushed all the asset prices up. That's a bad place to be when you start to see the system break apart.
Yeah, and like you said, and before the 08 crisis, the Fed only had about 850 billion on its balance sheet, and now I don't know if you saw this, they updated it yesterday, and they've
I'd like to see this.
Yeah, let me show you. They've actually look at this. It's actually gone back up. You see?
Yeah, there you go.
Billion. But what I'm trying to say here is that is there, if they start printing a lot more, will the system, will investors buy into it? I think we're coming to the point where I think von Mises said about the crack up boom.
Yes.
There comes a point when people realize that the inflation is never going to end, and they go away from the currency into real things. He calls it the flight to hard assets or tangibles. I think we could be just there, and maybe they are trying to bring in a CBDC. But even if they are, I think it's very important to have some physical gold and silver. And I kind of agree with you about Leo Brainard, because I just found something here, and I'll show you. Because she recently, like you said, left the Fed. She was the vice chairwoman. She was deputy for, I guess, Powell, and she's now moved into the White House. She's going to be economic advisor and director of the National Economic Council. It seems quite, I don't know, it seems coincidental that she's just moved there, and now all this thing kicks off. What do you think?
Right. Well, first of all, in terms of CBDCs, the Bank of International Settlement said everyone has to have an operational one by 2025. And as far as Lael Brainard is concerned, yeah, I mean, her whole thesis is abolishment of the commercial banks and monetary policy being directed directly to the public through your iPhone. And her thesis was very controversial. In times of deflation, we will give people money. In times of inflation, we may take money from people. She acknowledges that it's controversial, but that's what the ability of being able to do monetary policy really is. Because what is frustrated, I'm sure, the Federal Reserve is the overnight repo, reverse repo market and the excess reserves. Because when the bonds are purchased from these banks, the only way money is created, i.e. monetary policy, is through lending it into existence. So the Fed can lower interest rates by buying bonds all they want, but that money doesn't get out into the system unless the banks lend it, and they're not. They're rushing into the reverse repo market, rather give the Fed that money at 4% overnight than lending it out into the economy. They don't like that. That's actually deflationary. That pulls money out of the system and liquidity out of the system. If they want inflation, then it has to be lent into existence, and the banks aren't lending into this fragile economy. I think it is more than coincidental. And if you wanted to do this, you herd everyone into the commercial banks and then find a token, what's it called? What's the word I'm looking for when you, a token sacrifice at the altar, and let one of them go and watch the panic then. Oh, we're here to save the day with our new CBDC. We're going to make everyone whole who just lost everything they own, a new digital dollar. but the other banks, we're sorry to say, we're going to have to get rid of you too. I mean, I don't know. Could it be that easy? Probably not, but something, something along those lines. If indeed that's what they're trying to do, this is the playbook. Get rid of all I mean, there are a lot of countries like Canada who only have like 4 major big banks that run it. That's what they're going to do here. And if you own a small bank, I feel sorry for you. And I think you're going to see a daisy chain of systemic failures, and it's going to be very, very frightening. I truly believe that there's something more to this. It's not just coincidental. This is thought out. This is planned out. Just like weaponizing the dollar was thought out. There is no way that they would weaponize the dollar and think that there wouldn't be any consequences. And I think the consequences of kicking Russia out of SWIFT and freezing their assets, and in the case of the European Union, actually confiscating those assets to be used in the rebuilding of the Ukraine, is going to make the rest of the world say, I'm out. We're done with this. We're done. Because if we fall on the wrong side of the US or of the Western interests, then they're going to do this to us too. So it's time. So all of these countries at the same time are coalescing against us as we continue to make ridiculously moronic decisions that should only reinforce all of these countries' decision to break free from the Western hegemony and do all they can to form this union before all hell breaks loose. Yeah, Mario, it's hard to have these discussions with people I care about. You're someone who gets it. The people who listen to you get it. The podcasts I'm on get it. I almost feel like a wacko when I'm talking to people here in my country club in Florida, or financial advisors that are just completely in the ether. They have no idea what's coming. But I'm telling you, in my whole career, I've never had this feeling inside of me like it's coming. And I don't know. I think we are right there. So yeah, a move like that from Lael Brainerd out of the Fed, a second in command. She made her whole thesis. You can read it, what she wanted, and now she's in Biden's White House, the administration that you can't make up how stupid they are, an administration that thinks $5 billion to build a wall to keep our children from dying of fentanyl poisoning and letting 5 million people in illegally is too much, but 114 billion to the Ukraine isn't, including giving pensions to their government when there's a $1.75 trillion pension shortfall in this country. I scratch my head and say, what's happened to this amazing country? Who did we elect? If we did, why are they making these decisions? Are they purposely trying to bring down this country? And you can't make it up. So sorry for going on a rant, but I mean, I'm just besides myself. You look at what's happening, and I got a 15-year-old kid and 2 others that are a little bit older, and I'm scared crapless for the world they're growing up in all of a sudden.
Yeah, and here in the UK, we only have like 4 or 5 big banks, and in the US, there's over 4,000 banks according to the FDIC.
Not for long, there won't be.
Yeah. So yeah, thank you, Andy, and we're gonna keep an eye on things. It surely is getting very interesting as we speak right now. Gold is at 1962, up $42. Even silver is up 51 cents, and the Dow is down 420 points. So like you said, it seems like there's fear out there, and I think that's when you get the greatest bull markets in commodities. It's not greed, it's through fear, and I don't think we've had that within my adult life.
No, we haven't. I'd like to say one last thing. I know you got to run, but do you think there's any coincidence in all of this that the central banks bought the second most gold they've ever acquired in history in 2022? Do you think there's any coincidence that here in the January numbers just came out, 192% month over month increase in January? Do you think there's any coincidence that Turkey, who just joined BRICS, bought more gold than anyone in the world in 2022 and have increased that or have maintained that trend in January, purchasing another 30 or 40 tons of gold, the most in the world again in January? What is happening is that the biggest money in the world is de-dollarizing, and they have been using the suppressed price on COMEX to do it. And I just want people real quick to understand what I mean by suppression. Right now, roughly $7,000 in a margin account allows you to control nearly $200,000 worth of gold. So if you're a commercial bank and you have $500 million in your margin account, you can create whatever perception of reality you want by suppressing the price of gold and then gobbling up the physicals that subsidize prices and papering it over. That is what they have been doing. And when you see the most well-funded and well-informed traders in the world use a price that everyone here in my country club who thinks they're smart, these financial advisors, well, why was gold flat in the midst of 40-year high inflation and war? Because you're dumb, because they're suppressing the hell out of it and the banks are gobbling it up. The most sophisticated people in the world who are closest to the information are misdirecting us all, at least not us, but the people who aren't paying attention. And they're using that suppression and the rhetoric, the Western rhetoric, to de-dollarize and to accumulate copious amounts of tangibles. Just like we talked about what Zoltan Pozar said, this is Bretton Woods 3, a system dominated by transparency and commodities, not a system that is completely opaque, filled with debt instruments and failed promises. So Mario, I love what you do, brother. Please keep doing it. I love coming on this show. I hope your listeners will give us a shot. Info@Miles Franklin. Mario sent me. I'll make sure they get the best service and the best price. And I'm just an email away from you, buddy. Anytime you want to jump back on, I love it. And I thank you for giving me a soapbox today. It's kind of cathartic to, start my day by venting, because I think it's time that I really tell the world, that at least those that are listening, that how I feel. And anyone wants to believe me, great. If not, do a little research yourself. I think you'll see this is becoming very, very real.
Well, Andy, I thank you for your time, and I wish you a great weekend, and hopefully you play good golf.
Yeah, well, tomorrow, Saturday, as long as I can shut my phone off, I have a feeling that's going to be difficult, but I hope you will be too. I heard you're playing this week. So all the best to you, Mario, and let's do it again soon, brother. And thanks again for having me.
Thank you.